Hey everyone, it's Nick with Us versus Herd. If it's your first time here, hit that subscribe button. If you want to get notifications before we go live, hit the bell button. We go live 30 minutes after market close. If you're not yet a member of our free options trading group, hit the link below. I post all my trades in there. We have a great community of people asking questions, commenting on stuff that they're trading. So if you want to be a part of that, hit the link below. It's free. If you're here right now, say what up. I think I was talking to FC. Linda was here. Tobin, Oliver, Kit, Carmine. Who else is here? Dorian, Jeff, and all the familiar faces. Jordan, can we talk Tesla? Absolutely. Ray Lee, William, Greg, what's going on? What's going on, guys and gals, girls and boys? And Tom, how you doing? Oh man, today was pretty crazy. So far this week, I haven't had any crazy winners, but I also haven't had any crazy losses either. I've just been kind of slow and steady, grinding, taking my profits where I see them, and just playing some defense. Today, as you can see, the S&P's closed red to nearly flat. You know, Bob, welcome. Manny, what's going on? First live stream for you. Welcome, Bob. Glad to have you here. If you're new here, say what's up. I'd like to meet you. William, do not turn SPY. Big fish playing in that pond. Yeah, so yeah, when a stock closes flat, like the S&Ps, like SPX or SPY, like it did, it's only down 0.02%, and you were holding for a couple days, and it closes flat, or you were holding from yesterday, closes flat, that's just theta burn, man. That's just theta burn if you're just holding the whole time. Now, if you bought today at the highs and shorted it, you know, good for you. But it did not pay to hold this, because it just came back to where it closed yesterday. So, Samuel, what's going on? And all right, yeah, today at open, we clawed back our way back. I was down about not exactly at open, but like 20 to 30 minutes into open. I was down about $200 per account, which means I was down $800, which was, actually, I haven't had a loss like that in a while. It's been a long time, and I was playing buy the dip, and that was wrong. Yeah, buy the dip has not been working. So I came back, clawed my way back. So instead of being down $200 on the day, I actually closed up $5 on the day, and I'll kind of walk you through, what I did to kind of get back. Just to kind of, before I get into that, I do want to say that even though I was down a couple $100 per account, and yes, that does equal a lot of money, never did I once panic. Never did I once panic sell. Like, if you panic sell in times that you're in trouble, you're most likely not going to be able to get your money back. You're not going to be able to get where you were, or back to break even. Like, when you're down $200 in the day, or $100 in the day, or $300 in the day, or the losses keep, your goal at that point is survival. Your goal is to get your cash back. Your goal is not to make big profits. Yes, I only made $5 on the day, sure, but I was in a worse off position at open today, and then we maneuvered our way through the market, and we were able to get out. And I will say though, $100 of those losses was actual gains from yesterday, which I'll go through on Alibaba, because when Alibaba opened this morning, I was immediately down 100, mainly because at close yesterday on Alibaba ripped down at close, right at close, and I was up 100, and then we gapped up. So then I was back to break even. So that's why, I was immediately down 100, but luckily I got most of that back. So, I'll walk you through the trades here. William, I only lost 21 today, so not bad, not bad. Hopefully nobody had issues with Robinhood today. I didn't see anybody really posting anything about that in our group. Yeah, 50% of the loss was on that Alibaba pop, and I'll kind of walk you through here. You know what happened. I didn't place any trades in the morning. So like I said, I was down $200, but I'd never panic sold. I never got crazy. I never got like start buying things or started selling things. Like when you're in a position where you're losing, you kind of have to sit back and say, okay, what's going on here? Why am I losing? What positions are causing me pain? Why are they causing me pain? You know, Baba was causing me the most pain, and the way the chart was looking at, you know, I didn't think it was, you know, I was down 100, but it was $100 in profit. So I was actually break even. And when I posted, and this morning when I posted in the options trading group, I was only down $8 on Baba. So most of that loss was actual profit from yesterday. So I gave back profits. But what's going on, Jack? How you doing? Glad you're here. So like I said, I didn't actually, well, an hour it took me. I placed my first trade at 9:28. So Maureen, how you doing? I placed my first trade an hour after market open. So I didn't panic sell, kind of just chilled. Just try to take a seat back, see what's causing you pain, see how you can maneuver, and just look for new opportunities and see what you can do to adjust your portfolio. As you can see, I didn't adjust a lot of things here, and a lot of the stuff that paid out today was trades I had on from yesterday as well, so that kind of helped as well. USO, my first trade of the day, I averaged down USO. I have the January 18th calls. Let's go to USO. USO, as you can see, had a pretty crazy day, up almost 4%, up 3.5% today. You know, just crazy. If we go into my USO trades here, I will. Jack, I'm not talking about your. Jack, I'm not talking. I'm not talking about your miscalculated mid prices here. Anyways, so on, just to give you some context, on December 7th, I bought these 12 strike calls for January on USO for 24 cents a pop. Today I averaged down for 14 cents, and the reason why I averaged down was because oil was going up, inventory reports, stuff like that. But the main reason here is I've been telling you guys, oil above $50 a barrel. You know, I'm bullish on oil above $50 a barrel. If we can get this to click here. Okay, so I was telling you guys I'm bullish. People are saying, like, you know, these calls aren't paying out and stuff. But you got to be patient with USO. You don't necessarily get paid that quick. Like in here on this drop in October, you're getting paid pretty quick. But down in here, you're not getting paid. You're not getting paid because it's consolidating right now. It's consolidating. So you can do what you want, but I'm bullish on oil above $50 a barrel. USO, every time it was hitting the 11s, it was getting rejected, but now it looks like it wants to trend up as well. Back in here, every time I hit 11, it bounced back. And we did make some money on puts, but now it looks like it's trying to trend back up as we're getting some higher lows in here. And then, based on oil inventory and stuff like that, and Saudi Arabia cutting back, the U.S. is still going to have production. But that's why I averaged down, is because oil above $50 a barrel, and I was almost down. I was down like 30 to 40% on those calls, so I thought it was a good time. And actually, that's where a lot of the gains came back today. I was able to get $50 back today on USO, mainly from averaging down on that position. Oliver, why not sell puts on USO? For me, it's not really worth it. It's not really worth it. It's a pretty low price stock. I don't really like trade. I don't really like selling premium on stocks that are less than 100. It's just my personal preference. Obviously you can do what you want on your own accounts. If your account size is a certain size, and my account size may be larger than some people's, or it's probably smaller than some people's, whatever it is. But I don't like to sell premium. Like, for me, I don't find it worth my time to sell premium and a use of my capital if stocks under $100. Sometimes I'll sell premium and Square and stuff like that, but IV gets really, like, the option prices get pretty inflated there. Sometimes I sell premium in Twitter as well, but that's about it. Chat, what's going on? Speaking of selling premium, I want to ask about doing it on Amazon on Thursday. All right. Yeah, guys, hit me after I get through my trades. Hit me with the questions. Alibaba. So to give you some, I put Alibaba on yesterday. Let's go into our trades. So yesterday I put Alibaba on Strangle. I had the 152.50 put and the 160 call for $1.58. I sold it for $2.17. I could have sold it yesterday at market close for more money. I did make $59 on this. I was up $111 yesterday at close, mainly because Alibaba, as you can see here, when I put the position on was when it was consolidating. Then it ripped down, and then it had a second leg rip down. Right, last 15 minutes to close, ripped down a whole $2, and I was up $111, and I was like, well, we'll just let it ride. And this is kind of what we'll show you. This will show you what happens. I was up $100 on the trade. This shows you what happens when you don't take profits. When you don't take profits, you're exposing yourself to risk, and I knew what I was exposing myself to, but I decided to do it anyways. And then when we gapped up $2, it really hurt my position. I had the 152.50. Yes, I was close to my strike, but I wasn't in the money. And also, these were expiring Friday, so Theta was really eating into that as well. So Theta is going to kill you. Directional, it's going to kill you. So your delta Y is going to kill you. Everything accelerates closer to expiration. So when it moves away from your strike, this close to expiration, it really hurts. So this morning, the reason why I didn't sell it for a break even, I was considering, well, maybe I'll just sell it for break even. I was down like $8, $5, $1. I lost my profit, but I could still get back. I could still sell it for break even. And the reason why is because of this descending pattern here. This logo is messing it up here. Is because it kept making lower highs here, and it looked like it wanted to bounce back, but the highs kept getting sold off. And then it finally just broke down here, and then I sold it. What time did I sell? At almost 10 o'clock, 9:59. So right at right here, I think I sold it around like 150, 150, 150, 125, somewhere in here. And thankfully I did, because it just ripped up, and I would have definitely lost money. So when you're this close to expiration and it's churning sideways like this, that's not going to be. Let's see how much it's worth now, actually, because it pretty much closed where I sold it. So let's see how much. So I sold it for $2.17, and just to show you option pricing here a little bit. So I had the 160 call, 152.50. So right now it's going for $1.94, and I sold it for $2.17. So just to give you some context of how much that sideways churn, it took out a good percentage of that. So yeah, I mean, I sold it for $2.17. Right now it's going for $1.94. But why keep the risk on? Why keep the risk? So as soon as it dropped my way, when you get a big drop like this, you tend to want to take profit. You want to take profits, because as you can see, big drop, a big rip, and this could have easily, after this drop, it could have easily ripped up to 155, 154 pretty easily. It had the momentum. It just got sold off. And then it just kind of churned sideways. Easy, what's going on? Marine, now Baba can go up to 162.50 tomorrow. 162 tomorrow. That's fine. I don't have a position on Baba now. So now that I'm clean, you guys can have you guys can do whatever you want with it. I have no position on Alibaba right now. Nick makes fun of me, bro. No, I don't make fun of you. I just give you a hard time. It's just having fun. We're just having fun. No hate. Gilda, what's going on? So that's what happened to Alibaba. So I was at On the day, I was down $100, but that was profit, so I was able to close it out for a $59 winner. So I left, since I didn't take profits yesterday, I left $41 on the table, or $55 on the table. I left $55 on the table and increased stress and increased risk. Wasn't worth it. Should have closed it out. Should have closed it out after this major drop. So it's a good example of what happens when you don't take profits. Yes, I got out alive, but could have easily not. I could have lost money on that trade very easily. Could have dropped down here all the way down to 151 and then gapped up and went up to 155, 160, as you know Baba likes to do. So next, what's the relationship between IV and option prices, Carmine? Usually when IV is high, option prices are high. When IV is low, option prices are low. Usually. But you have to look at each trade at a time. So what else did I do today? Also GE. I shorted GE. So GE, as you can see, didn't really recover from its highs. I was actually surprised. I thought I was going to maybe make a run to 8, and I was really hoping that it would run to 8. I actually still own BABA stock, so I'm bullish on BABA as well, but I just trade short-term options. So GE, I know some people are asking about GE today. JP Morgan upgraded GE today, saying an analyst on JP Morgan said it's finally bottomed out. And at the end of the day, like, who is anyone to call a bottom? Who is anyone to call a top? Like, who am I to say GE's at the bottom? Or who am I to say GE's at the top? Or who is this guy? Obviously, he's associated with JP Morgan, which may want to unload, not saying this happened, but they may want to unload GE at a higher price than what it was and try to get out, which tends to happen. Just saying. Overnight, if you think about this, overnight, GE's business didn't change overnight. Nothing happened. The only thing that some guy opened his mouth and said, "Hey, I'm upgrading this to a buy because I believe it's bottomed out." And I mean, if you look at the chart here, I mean, it hasn't even created a base, and the guy is saying it bottomed out. Like I told you guys, my initial target for GE is $5. And I haven't traded in a while. I've just been trading. I've been shorting the green days. I was hoping it would get above 8, but 8 looks to be some solid resistance down here. It's double top, triple topped here a couple times, and now we're heading lower. I mean, the guy, this was going lower. This was not breaking trend. If you zoom in on this, every day it's been going lower until someone just says, "Hey, I'm going to upgrade this to a buy," whatever. GE didn't change their business overnight. This guy didn't add any value to the business. There's no buyout. There's no, it's nothing. So I was actually hoping for it to go up, but it immediately sold off. I put a position on at 10.10. So right in here when it was consolidating, right in here, 10.10, right in here, it was around 7.30. We're now at 7.22, so it didn't drop that much since I put a position on. Could have got a better price at 7.62 when it was 7.62. Well, it actually opened at 7.50, so didn't do that bad. I bought puts for next week, so we'll see what happens on that. So we got a little bit of money back on that as well. We got only $8. We're up, nothing big, but we'll see. So I have the seven strike puts for next week. I got 4 of them on each account. So we did that. Microsoft's probably going to be the trade that goes against me this week if we can't get lower. It does look like it wants to go lower. And if you look, where's some charts here for last week? Anyways, Microsoft does look like it wants to go lower after hitting a low of 103 this week, going up to 111, hitting 111 like 3 times, and now heading down lower. It does look like it wants to go lower. If we look at Microsoft here, it's still trending lower, even though it is mid-range right now. It could go either way. Yes, we could revisit right now 111, but however, we can visit 108, 106 area pretty easily here on Microsoft. So really, not right now, it could go either way. And what I did on Microsoft is I had a strangle on from yesterday, or no, 2 days ago. Yeah, so 2 days ago on December 11th, I put a strangle on for $1.36. I had the 108 put, the 112 call, and it's really just been churning between it. So then today I added another 108 put for tomorrow for 53 cents to kind of average that down. And then if it does go closer to 108, I'll make more money faster. However, you know, it looked like it wanted to break down, but it was very, very stable around 108.75. 108.75. It did look like it wanted to go down. Every time it ripped down to 108.75, it ripped up, then came back down, ripped back up, then came back down, and then at close, ripped back up. And then, you know, so we're at 109.45. So tomorrow, I was willing to accept the risk. I could have taken this trade off the table, but tomorrow, the most that I can lose on this position, if we go into Microsoft here, the most that I could lose on this position is $68. And $68 wasn't worth it to me to take the trade off. I'd rather experience max loss on this and try to get to 108 than to take this trade off. I can easily make up the $68 somewhere else in my account and place new trades tomorrow versus, you know, I have a better chance of getting this back. And then if I do lose the $68, I will then balance it out somewhere else and make the money somewhere else. You know, so that's why I left it on. So it's not that, you know, you could say maybe it was reckless, but I do have a plan. I do have a plan. If that $68 goes against me, I do have a plan to make it back. Oh, and UAA, Under Armour, I sold off. So on lower price stocks like that are like 18 and they start going away. Yesterday I put a strangle on for $1.01. I sold it for $1.44. So we made about 40% or a little bit more than 40% on stocks that are low priced. On stocks that are low priced, like, you know, we're at $18 now. You tend to have to be happy with 50%, 60%, 40%. You know, I don't try, like on these small price stocks, I don't try to make 100%, 200%, 300%. I try to just, you know, it looked like it was bottoming out here. So I took it off at noon. So right in here was bottoming out. I took the trade off at noon. So right in here, I took it off right before it skyrocketed, thankfully. So I took it off at noon and, you know, pretty much stayed flat, but I was worried that we could revisit 20 or 19 and I'd lose my profit. So best to exit. It went my way, best to exit. So that's where I made some money up as well today. I made another $35 on that. So that's where we kind of recovered. So, you know, some of my trades that I put on yesterday worked out. Richard, what's going on? Zilla, what's going on? DD1, what's up? So that's where I recovered some of my losses and ended up. That's why we're up. I was down $200 per account. Now I'm up $5 per account. So that's why we fought back hard. And really, the only places I lost today is Microsoft, Alibaba, and Bank of America. Richard, you don't have to do that, man. Thank you so much. Richard, you're the best, man. Thank you. And I don't know how to repay you, man. Thank you. Richard catching me off guard here. So those were my trades. That's pretty much how I made it back. How I made the back money. Stitch Fix. I made a little bit of money back there too. Today I'm down $1 on the overall position. Made back $10. I'm up $10 on this position. I'm up $10 on the day. I'm down $1. So I was down $11 yesterday. Now I'm up down $1. So on Stitch Fix, I actually had it was actually a bullish strangle, which now is paying off to the bearish side. So I had the 22.50 call and the 21 put, but looks like it just kept hitting the wall up here. It did spike up to like almost 23. It did hit 23, it looks like, and then today it just sold off all day. So right now my target's 19 or 18 before I take this trade off. So I'm looking for it to go down to about 19 or 18, and then I'll take the trade off. Matthew, you're following me into the fire on the Microsoft trade. following me into the fire. Just have a plan. So I mean, this could easily be 110 tomorrow, 111, and then I'll really get hurt on Microsoft. But I have a, we'll work something else out to get that $68 back. We've already got back what we lost here. Right now we're down 123 on that position, and I can only lose $60 more. I'm already up more than that this week, so it was worth it to me to kind of let this play out, win or lose on Microsoft, and then put another trade on to balance that out. Bank of America also just kind of churned sideways. It did have kind of a rough day as well, but really didn't really move that much. It never really gained any momentum, but now we're below 24.50. I have the 24.50 put and the 25 call, so very tight strangle. So we'll see what happens with that. I have that for 3 weeks out though on Bank of America, so there's no rush on that. 15 days out, December 28th. So there's no rush on that. So we'll clean some of that up. Hopefully we can make some more money on oil in the next couple weeks and kind of turn this portfolio, put some different positions on. Yeah, Matthew, you got came out even on BAC. Nice. I think someone wanted to know about. Let's see here. DD1 oil made a big move. Yeah, we made some money back in oil. DD1. Someone was talking about looking at Tesla. So Tesla, like I said, guys. Let's go to the 2 year. So Tesla has a lot of momentum right now, but be very, very careful here at the 380, 390 area. This is a long-term rejection point here in the 380 to 390 range. So it tapped it once, twice, 3 times, and now it's going for it again. So it could break through. Not saying it's not going to break through, but use extreme caution if you're trading this. And we've been talking about it. Yes, it's had some great momentum the last couple weeks. I mean, in Tesla, let's see, is on my list here. Tesla closed green today. Tesla in the last 3 weeks is up 8.43%. So, pretty big. That's a pretty big move for Tesla. I mean, obviously, it's big anyways. I mean, 2 months ago it was 251. Now it's 376. So it's going the opposite. So obviously somebody's finding value here on Tesla. People are buying it for some reason. But like I said, be very, very careful up here. And the last time it was up here is because those Elon Musk tweets. The last time it was up here. So the reason why it spiked from 300 up to like almost 400 was mainly because of those tweets from Elon Musk. Before that really hurt the stock when he said it. He was drunk or high or whatever. It was tweeting, or I don't know. He was on Ambien or something. I don't know. Easy. Same sectors, different names. What's the question? Jordan's ready. Yeah, I mean, it looks like a good short, but also be mindful. It's got a lot of momentum right now. Just be careful. All I'm saying is be careful. I'm not trading it. I'm kind of waiting to see if it plays out. If it looks like it's getting rejected, I'll lay in a short. But if it looks like it's going to pop through, I'm just going to wait till it gets above 400, and then we'll see what happens. We'll see what that looks like. FC was saying selling. I'm getting better, not giving back my gains. Richard, that's the goal here. That's the goal. This morning, the market tried to take money from me. I said, no, you're not. You're not doing it. Like I said, I've told you guys many times before. Like, the market wants to take your account. They want to take your account down to zero. You can either lay there and take the loss, or you can say, I'm going to fight this. I'm not going to let them take it. I'm going to put on some new trades. I'm going to play some defense. I'm going to balance this out. They're not going to take this from me, and that's why it's a good idea to not regardless of playing defense, you shouldn't put your whole account at risk anyways. Like, there's a lot of people that trade their entire account and then the trades go bad and they can't get out. Like, have capital aside that you can reallocate and make new trades, play defense, and that way you can get yourself out of a bad position. The only reason why I got myself out of a bad position today is because I was able to put new trades on and take some trades off that, you know, I had capital on the side to move things around. At the bottom of the screen, boss.com. Welcome here. At the bottom of my screen is the implied volatility chart. You can get that from the studies, and you can get if you go to add studies, implied volatility added under here. Speaking of selling print, doing so on Amazon on Theta Thursday is what I want to discuss briefly. I know you can't every Thursday, but most. So selling premium, Amazon. So if you want to sell premium on Amazon, let's see what they're at. They're at like a 69.4 IV rank. They're above 50s. They're above 50s on the weeklies. So if you wanted to sell premium, like let's say you wanted to sell premium on Thursday, sometimes I sell. It's kind of a risky move, and I definitely don't recommend doing this. Like if you're new at trading. Because it's a little bit of a risky move. Last Thursday, so I have something I call Theta Thursday, where when premium's rich, I sell premium on Thursdays and take advantage of the IV crush on Friday. And it's not like I didn't innovate anything here or anything. I mean, a lot of people do this, but you know, if you want, you can sell premium and take advantage of the crush. Now, this is not going to be right because this is definitely not right. 191 profit, 59 max loss. The market's closed right now, so it's not reading these option prices very well. But what I would do here on Amazon, if I was going to sell it the next day, what I would do here, you want to sell it within the expected move, and the idea is that Amazon opens flat, or maybe down a couple points or up a couple points tomorrow, where you take advantage of the premium crush and right at open, you take the money. Now it doesn't work. It doesn't work if Amazon gaps down 50 points or gaps up. But if you have a good range and premiums are rich, you have a pretty good chance of making a profit. Bob, thank you so much for the $10, man. Appreciate you tuning in to the channel. Glad you're here. So this is what I would do. You know, but you got to be careful because we could easily go down to 1600 tomorrow. And when you're trading like this, when you're selling premiums like this that expire the next day, you got to be very careful that you don't fall in the money, get assigned. You got to be very careful that you stay disciplined, take that money out. If you're up money at open and you're only up 10%, 25%, take that money. You don't want to get screwed. So that's what I would do. SPX, you know, I like to trade like that. SPX, I like to sell premiums in as well. However, I wouldn't sell these premiums because let's see what they're going for right now. I wouldn't sell, you know, this is good, but I feel like the range isn't very good because tomorrow we could easily open up below 26.30. As you can see, like SPX, so like SPX is probably not going to be good. This would not be a good Theta Thursday play because, you know, this went down from, this cut through like 30 points today. We could easily gap down. We could easily gap up. Like if you look back here, we gapped up from 26.36 all the way up to 26.66, which then you would be feeling some pressure here. So I feel like right now, because the market's pretty violent, they're not giving you a very good range here. A $24 move, you know, is not that great a range. You probably had a better chance on Amazon or Google or some other high price stock like that. If you don't have money, stay with lower stocks and build your account. Yeah. Steve? I didn't do it. I didn't have any rants yet. I didn't have a rant. However, I don't know if you guys saw the Cnbc Alert just came out right before I came on, just to give you guys a heads up. It says, CNBC breaking news, Trump inauguration spending under criminal investigation by federal prosecutors. So just to be mindful of that. Things might get a little hot in the Oval. You know, those Twitter fingers turn to trigger fingers pretty easily. So just to give you guys a heads up of what might be coming in the pipe. And usually, I feel like lately when the magnifying glass is on Trump, he tries to distract with a lot of other things, and it's not in the best interest of our stock market. I feel. Can't fight the feds. Adobe earnings. So let's look at Adobe. Chetton, you got me, man. You got me. I feel you. Adobe. So Adobe had earnings. We were talking about this yesterday, and then Costco had earnings. Now Costco. This is where you got to be careful about earnings plays, and people like to play earnings plays. Costco. Let's see what Costco's expected move was. So Costco's expected move was $9. It's currently down $6-ish, a little less than $6. So earnings plays, you only really make money on earnings plays when it goes beyond the expected move because premium's really rich. So if it's within the expected move, you usually don't make that much money. You may make 10%, 20%, 30%. You're not going to make 100, 200% unless, if Costco moved down $15 or $20, then you make the money. But if it's within the expected move, the market was anticipating a plus or minus $9.15 move here. And right now we're within range. Not saying it's not going to go below. Like this would be way better at like 217, 215 if you bought puts. Would have been way better, but you got to be very careful of that because also these expire tomorrow, so you also keep track. You're going to get you're going to get IV crush. Theta's going to get to you, and if the stock moves around a lot, you're going to leave some profits on the table. So you got to be careful about that. And then people that have played Adobe, the move was $10. The expected move was plus or minus $10, and right now it's flat. So selling premium in here would have been way better because you would have definitely, I'm not saying, I don't know where this is going to open tomorrow, so you got to be mindful of that. I don't know where Adobe is going to open tomorrow, but right now it's flat. So if it opens here at like 247, 245 or anywhere, like these people selling these iron condors today, They made some easy money if it opens up here. I mean, 143 max profit, 107 max loss. Very nice risk to reward ratio here. Stays within there. Nice premium crush tomorrow. Theta, they're gonna make some stacks tomorrow if it opens up around here, like anywhere between 245, 250, anywhere between 245, 250. I mean, they're gonna be making some money. I had a great skewed condor for Adobe plan, but got busy. Maureen, you don't know. Yeah, I mean, this could easily have been down $20, and you would have been like, if Adobe was up or down $20, you would have been like, man, thank God I didn't put that trade on. you know what I mean? So it's like, sometimes when you forget to put a trade on, sometimes it's good because you saved yourself from some losses. But other times when it does work out, you're like, man, I should have had that trade on. But it's what it is. Costco tomorrow. I mean, I might look to do like an after earnings trade. Definitely I like it down here at like 220 at the support. So definitely if it breaks below 220, 217, will be nice because it's bounced in the past here. So this might be a good day trade tomorrow or a trade for next week. And then Adobe, if it doesn't really move, Adobe's still in range. So I don't think it's not looking that interesting to me. Tomorrow for a day trade or for a trade going into next week, I would prefer to trade Costco because you're gonna get that IV crush, you're gonna get that premium crush, and you'll be able to put a nice trade on. So if it opens down here, I would definitely if it opened around 220, that would be ideal for me to open a trade around 220, 217. Matthew, we didn't talk about Netflix. We can go there right now. I was just talking about those Costco and Adobe. Netflix looks like it had some bullish momentum. It's still kind of around the 260 range, which we've been talking about this week. It's still here around the 260 range. Top range is 300. 260 is the bottom of the range right now. So right now it's very mid range. Easy, what do you mean Friday? I trade on Fridays. D1 bought some more AMD today. Nice. So yeah, I mean, for me, Netflix premium is really expensive. It's at the top of the range for the week. Well, near it. It started at the top of the range, but now it's at $275. So it could really go. It could really go either way. I mean, right now it's not that we needed to break out of this, either to the upside, like above 300 or below 260. We needed to go somewhere. Yes, you can make a lot of money in between there, but for me, that's where it's not that interesting because it could be very slow moving in here, and the churn could really hurt you between 260 and 280 right now. I have a 285 call and 265 put, so I guess I'm right there. Yeah, I mean you're right there. But the problem with your position, Matthew, is you needed to break. When do you have it on for, Matthew? The problem is you needed to break above those or below it, and right now it's between, so your premium's just getting torn apart. I'm not looking to sell. No, I'm not going to look at to sell some premium on Costco tomorrow. I'll probably look to buy some premium. Excellent. How you doing? Oh, 1228. So you got the 1228 Netflix position. So you got some time. So you're within the expected move. You're within the expected move. I mean, it's pretty risky though. The only reason why I say it's risky is because it could just churn between here. Yes, it needs to break out eventually, but you don't know when it's going to happen. And then while you're waiting, it's just churning and churning and churning and taking down your. You probably see that you're down on the position. I don't know when you put this on, but if you put this position on, anytime within the since December 6th or so, you're probably losing money. Or even if you had this position on when it was like on November 28th, and if you had it on for almost a month or 2 weeks, you're probably losing money on this right now. Just because it's churning sideways and not really doing you any favors or breaking out. At this price, you need it to be, above like 297. And I don't know how much you paid for it, but I'm assuming you paid more than 1085 for it. Glenn, what's going on? Glad you got paid. First time here. Welcome. If it's your first time here, say what up so we can meet you. The UVH fam, very nice people. Everyone here is very welcoming. We're all just here trading and learning and trading and learning and trading and learning. Okay, Matthew. So you put the call Tuesday and bought the put today. Okay, so you're probably not down that bad then if you didn't put it all at one time. So yeah, you bought some protection. It does look if you do. I mean, it was a good day to put a put on. I think for it because pretty flat day. So so you should be okay. But I would definitely like next week. Like during this week of December 21st, I would look to take the position off because the closer you get to expiration, if we're still in this range, they're just going to eat your premium alive. Steve, what's going on? We're all here. We're not easy. Easy's probably the nicest guy here, unless you offend him, then he gets kind of aggressive. No, but Easy's good people. What are my expectations for tomorrow? Well, so going back to the S&Ps here, the spikes keep getting hammered, and as you can see here, we've been talking about this. The low 2600s is a very dangerous spot for us, and as you can see, ever since we hit 2800 here, we've been making lower highs. So right here, back in December 3, we hit 2800, lower high here, Lower high here on December 7th, we hit 2709. And then yesterday, a lower high of 2688. And then today, a lower high of 2670. You gotta be careful. You gotta be careful of the. It was like I've talked about this before back in 2017, where people were like the market's gonna crash, but we kept making higher lows. And if you're looking at the market today, so the bulls won in 2017, undeniable, no doubt about it. If you're looking at the market today and we're making lower highs, the market has reversed. We're making lower highs pretty consistently, and you got to be very careful. You got to be very careful. Easy, I got you about the financial sector. So when we're making lower highs like this, you got to be very careful that, I mean, yes, we could have a catalyst and come back up to 2,700, and that'd be fine. But right now, the market's in a very dangerous spot, and has been for weeks, where we keep making lower highs, and we keep trying to visit this 2,600 area. And I feel like if we keep knocking on 2,600 door more times than not, like eventually we're gonna break through. And I'm not saying that's what's gonna happen like tomorrow. Tomorrow could be a flat day, but based on the chart and what's happening here, we're making lower highs, and we're definitely in dangerous territory. That's why I've been relatively laying in short. We did talk about Bank of America a little bit. Bank of America, the financial sector, obviously a mess. Bank of America and Goldman Sachs is at a multi-year low. We talked about that yesterday. Easy, were you here yesterday? I don't remember, but as you can see, Bank of America, it looks terrible. We have to go to the 3-year chart. Bank of America looks like around like the 23 range. This is some support we could break. We could bounce or level out. Goldman Sachs is just overall screwed. I mean, Goldman Sachs is in nowhere land right now. They're just dangling here. Right now, best case scenario, I see the 160s. I mean, this chart is just awful. I mean, it's just. But if you look at the pricing on GS, I mean, IB rank is really high. IB rank is really high, and let's go into like next week. They have earnings on January 16th, and it's expected move is $6. It's just I don't like to spend this much money on Goldman Sachs, because when Goldman Sachs moves sideways, like if you're looking in here from June, like if it moves sideways, you get really screwed. Now, you would have definitely got paid off of this, but since I didn't trade it, I don't like to trade when I'm after it's gone down so much. But I mean, it could still definitely go down more. I mean, it's definitely I think it's going to revisit 160 areas pretty easily. If we have a couple more down days of like Dow down 500, Dow down 800, I mean, this thing's going to get slaughtered. I mean, just ripped apart. It's terrible. It's just terrible. JP Morgan. JP Morgan's probably looking the best out of all of them. And yes, it has brought. We can go down to the 2-year chart. But it did break. It did break below this 102.50 where it's bounced in the past, and now we're at 101.12. Really the next stop here, next point of consolidation is like 95, 97 area, like 95, 96, 95 to 97 range. So it's not looking good. And when the banks don't do well, the market tends not to do well either, because they're just so big. And if you think about it, I mean, I think a lot of these banks probably shouldn't be here anymore based on the last financial crisis, but they got bailed out. Yeah, Buffett is going to be pissed. Buffett also has Bank of America. I mean, like I know it's bad for America. I'm probably gonna get in trouble saying this, but I know it's bad for America if the banks go under, of course. But like, if you think about the like 2008 and how much government money everyone took, like there shouldn't be a GM anymore. They went bankrupt. The government bailed them out. The banks, they let Lehman Brothers go, and like if you think about it, I mean, yes, like America wants to stay afloat. We want to stay, obviously, but like, if you think about business, sometimes you got to let natural selection take its course, because eventually it's going to catch up with us where we can't just throw money in there to fix it. We can't just print more money to fix the problem, and when a small business goes out of business, they just say, "Oh, that was too bad. They didn't make it. They weren't strong enough." You know what I mean? And at the end of the day, like GM wasn't strong enough to withstand a financial crisis, like a recession. They weren't able to withstand a recession. Like GM should not be here anymore. They should not be here today. Ford didn't take any government money. They should be here. Ford did not take any government money. They should be here. When businesses go out of business, small businesses or even like medium-sized business or or even like a Barnes and Noble or Border Books or if when those guys go out of business, they're just like, well, Amazon ate their lunch and have a nice day. That's too bad. But that's just my take on it. Easy. Do you think Trump will bail out the banks? I mean, he's gonna have to. Like, if it comes down to it, they're gonna have to bail out the banks. Like, if the thing is, I think what happened like in 2008 when the banks went under, and we were in recession, the banks were gonna go under. We were gonna be in a Great Depression. We were gonna be in a depression. We weren't gonna be. There wasn't gonna be a recession. It was gonna be depression with no end in sight. And that's what they were. They were trying to avoid that. But I mean, like the banks, they don't have solid ground. I mean, everyone's in debt. Everyone has credit card debt. Everyone has mortgages. Everyone is underwater. Everyone has student loans. Everyone has car loans. Everyone's underwater, and they're just making payments because their job allows them to make payments. If they don't have those jobs anymore, then we're going to have some real trouble. We're going to have some real trouble. So, I mean, they don't care. I mean, obviously, the government doesn't want America to go into a Great Depression. That's why they saved the banks. But, I mean, GM shouldn't be here. But my business is struggling right now, and a bank won't touch me. Yeah, I mean, it's sad. I mean, the small business owners, they make this country go. Like, there's small businesses employ a lot of people, but the next time we're in a recession, and it's gonna be bad. It's gonna be real bad. I'm not saying that we're going to go into a depression or anything, but the next time, I mean, there's definitely going to be, as you could look back in history since the Great Depression or further back, there's always going to be a financial crisis. There's always going to be something wrong. There's going to be good times. There's going to be bad times. We've had a lot of good times. It's kind of like in the stock market. Like if I win a lot in the stock market, I kind of take a step back and say, I've been winning a lot. I need to take a step back because when you win a lot, eventually you're going to lose, and you're going to lose pretty big. So that's why or even like when you lose a lot, you got to kind of take a step back as well and say, why am I losing so much? So, we can't, like, America can't win all the time. We can't win. Like, a lot of the companies that are here shouldn't be here anymore. Why did all those all those retail stores go out? Like Sears is going out of business. No one cares about that. You guys get the idea. I went from 5 employees in September to 1 in October. Yeah, I'm sorry. I'm sorry to hear that. Yeah, it's tough. I mean, owning your own business it's tough. I mean, I own my own business, and it's not easy. It's not easy. I mean, like I said, I've told a lot of people before that if you're not like an entrepreneur at heart, where what I mean by that is like, if you're not an entrepreneur at heart, like if you don't love being an entrepreneur, if you don't love it, you're not gonna make it. You're not gonna make it because the things that you have to do to survive as an entrepreneur and starting your own business, there are things that you're not gonna want to do because you don't love it. Like if you're gonna it's bad. It's bad. Like if you're an entrepreneur and you're starting your own business, you're not making a lot of money. Your bills are stacking up, and I mean, I know exactly how it is. I mean, when I was first starting out, I mean, I couldn't even take my car out. I couldn't even take my car out. I couldn't even fill it with gas. It was terrible. Like, so if like I said, if or like what did Elon say? Like, owning your own business is like chewing glass. Like, I definitely identify with that. But the reason why I do it is because I love it, and the reason why I do it is because I can't go work for somebody else. I haven't worked for someone else since 2008. Quick question on AMD. Pretty much the same thing that we talked about yesterday. I don't know if you guys were here. I know a lot of you guys are new. AMD is one of those stocks that right now is making higher lows, and that's still intact. If it breaks, below 17, below 16, then we're gonna have some real trouble. But right now it's having some bullish momentum, even though it is going rather slow. And the big pops were sold off. So, right now it looks bullish to at least 23, 24. However, if it breaks this trend, obviously, it really has to go below 17 to start breaking the trend here. Best challenge of all, when you do what you have to do and end is reward with a YouTube channel with 4,000 subscribers. Easy. I'm definitely blessed, but I definitely work very hard. Everything that I do, I work hard. I've worked hard my whole life. I was never given anything. My parents never gave me anything. Not saying that's bad of them. It's just they didn't have anything to give me. They didn't have my parents. We lived in I have 4 siblings. We lived in a 2-bedroom apartment for majority of my life. Let's see, made it out of college without debt from savings and investments. It's a blessing to be able to trade and interact with all of you. Yeah, I mean, it's crazy. Greg still owns 15,000 student loans. Yeah, when I was like, no one was paying for my college or anything, and since I wanted to own my own business, I made the decision that I either can spend the money on college or spend the money on myself and go into business, and I chose business, and thankfully so far that has paid out. Bob and Richard, if you're still here, thank you so much for the donations today. It really means a lot. If this video was of value to you, hit the like button. We're going to be signing off here in just a couple minutes. Yeah, just crazy. Steve says this is without a doubt the best group out there, man. Appreciate that. I mean, I think we have a great community of people, and that, I mean, you guys day in, day out come out and support me. I mean, it's great. Like, I remember I started streaming, I think, like in August of 2017, and I was like, I don't really know about the streaming stuff, if people are going to really like it, and nobody really interacted with me when I first started out, and no one really commented. Yes, I'd have maybe 5 people on or 3 people on, but no one said anything, so my streams were rather short. So, one of my favorite things is, I don't, people are saying, like, you don't get a lot of comments on your live streams, like, after the video post, or you don't get a lot of views on the live streams, and I could easily make videos that get me views, but the reason why I do the live streams like this that don't net me a lot of views is because I like to do it. I love to do it. I love to interact with you guys. I love to talk about the stock market. I love to show you what I did today, if I did poor, if I did well. I mean, this is part of the game. Traders lose, traders win. Like if a trader that wins all the time, if a trader only posts his wins, I would be very wary of that. Like, so I try to show you everything. So, I show you what I did today. I show you my losses. I show you. I mean, I posted a video. I did live streams when I lost 5 Fridays in a row, and we had a video series on it. It was terrible for my account, but it was what we had to do. You know what I mean? It was, I could easily make YouTube videos that garner 100,000, 200,000 views, but I choose to do the live streams because I want to interact with you. And the people that are in this chat right now are, there's 4,000 people that are subscribed, but day in, day out, we have 50 to 60 people here. And I really want to be here for the 50 to 60 people that support me instead of the 4,000 people that hit subscribe and don't watch. Like, I want to be here. I want to do these streams for those people because you guys are the most engaged. You guys are the ones that are actually trading, and you guys are the actual one that are actually putting the time in to learn, to trade, to benefit, and talk about your losses, talk about your wins, and that's what I want to get. I don't want, like, if you haven't noticed, like, this channel, I'm going after a very specific type of person. And you guys are it. So I definitely thank you for rocking with me. Definitely appreciate it. If it's your first time here, say what up. Hit subscribe. We do the live streams 30 minutes after market close. We're about to sign off. You guys all have a great rest of your night.